Assalamualaikum warahmatullahi wabarakatuh. My name is Ahmad Shahid bin Muhammad Iqbal, and I am the first presenter. The company that we have chosen is Ajinomoto Malaysia Berhad. So a little bit about the company's background. Ajinomoto Malaysia Berhad started its business operation in 1961 as Ajinomoto Monosodium Glutamate (MSG) producer. It is one of the very first Japanese companies to be set up in Malaysia. Ajinomoto Malaysia Berhad has since grown into a dynamic food and seasoning manufacturer marketing diverse brand name that is trusted by Malaysians for decades. Our Ajinomoto umami seasoning has become an indispensable item in almost every household. Example of the Ajinomoto products in Malaysia is Ajishio table topping seasoning, G Plus blended flavor enhancer, and Ajinomoto brand chicken stock. The mission of Ajinomoto Malaysia Berhad is to contribute to the world's food and wellness and to better lives for the future. For the vision, be a global customer-centric halal food company to contribute in resolving people's food and health issues through our specialties and innovation solutions. There are factors to consider to create a segment reporting for the company. First, nature of the business activity. The activity of that the company engage in for the primary purposes of making profit maximization. Ajinomoto Malaysia Berhad involves in food industry. So they are selling uh, their products and also manufacture the product to export to the other countries. Second, existence of the managers responsible for activities. Each segment reporting activity shall be given responsibility for the manager to plan, organize, lead, and control the organization. Ajinomoto Malaysia Berhad is the subsidiary of Ajinomoto Corporation. So, every activity shall be organized and planned by the headquarter of the Ajinomoto, which is the holding company. Lastly, information presented to Board of Directors. All segmental reporting shall be presented to the Board of Directors in an annual or quarterly report for every financial year period. And now we will talk about the types of segments. First is business segment, a distinguishable component of an entity that is engaged in providing an individual product or service or a group of related products or services, and that is subject to risks and returns that are different from those of other business management. However, for the geographical segment, it is a distinguishable component of an entity that is engaged in providing an individual product or service within a particular economic environment that is subject to the risks and return that are different from those of other economic environment. As for Ajinomoto Malaysia Berhad, the type of segment that been prepared is the geographical segment. Here we can see that these are the segmental reporting from Ajinomoto Malaysia Berhad. They use the geographical segment because Ajinomoto Malaysia Berhad manufactured the product and then export to the other country, which is Middle East, other Asian countries, and some others country. Next, we will talk about Chief of Decision Making or CODM. CODM is the individuals or the group of individuals that is responsible for the allocation of resources and assessing the performance of the entity's business unit. CODM of Ajinomoto Malaysia Berhad is the chairman and the BOD. These are the responsibility of the CODM. First, makes decision on allocation of resources based on the performance of the company to ensure profit maximization. Second, regularly review the operating result of both sets of components and financial information. And last but not least is assess and review the performance of the segments of the company.
Hello, Assalamualaikum. My name is Muhammad Yusuf Yaakob, and now I will continue the presentation with applying 10% and 75% threshold test. Firstly, for 10% threshold test, it is used to identify whether the segment activities is reportable or non-reportable. So a company can choose to do a test through three methods: revenue, profit, or asset. By doing tests, if a result shows that exceed 10%, so that segment will be classified as reportable segment. If a result shows lower than 10%, so that segment will be classified as non-reportable segment. Before we continue applying 10% threshold test, we need to know their total revenue, since we use the formula of revenue, which is internal revenue plus external revenue divided by total revenue. So we need to know the total revenue. Okay, for Ajinomoto, its total revenue is 443 million 119,251. Now let's apply 10% threshold test. As we can see, the formula used here is revenue, which is internal revenue plus external revenue divided by total revenue, as I explained earlier. So uh, for uh, for example, Malaysia, the total sum up of internal and external revenue, which is 258,390,358, divided by total revenue, which is 443,119,251. So we get 58.31%. So it is exceed of 10% and will be classified as reportable segment. Same goes to another three segment, which is Middle East, Indonesia, and Bangladesh. They will be classified as reportable segment as exceed 10% test. For another three segment, which is Cambodia, Singapore, and others, will be classified under non-reportable segment, since uh, the result of test lower than 10%. Now we move to the 75% threshold test. So after determining the reportable segment, a company should ensure the total external revenue from reportable segment is at least 75% of total revenue. So if the total external revenue is lower than 75% of total revenue, the company should uh, identify additional reportable segment. Okay, for Ajinomoto, as we can see, the total external revenue from reportable segment is 414,246 373. So when we do a test, 414,246,373 divided by total revenue, which is 443,119,251 times 100%, we get 93.48%. So the total external revenue attributable to those reportable segment is 93.48%, which is higher than uh, 75% of the entity's total revenue. So for this Ajinomoto, the company should not identify any additional reportable segment, as it is higher than exceed 75%. After we done with 10% and 75% threshold test, let's take a look with a new segmental report. So Malaysia, Middle East, Indonesia, and Bangladesh remain in the reportable operating segment, while Cambodia, Singapore, and others will be classified under other reportable operating segment. Now I will explain the advantages of segment reporting. Okay, we have 3 points. First, better understanding of company's performance, which is management and shareholders will be able to identify the overview of the current situation of the company's operation. So it is more easier for shareholder to analyze their progress, while management improve their business performance. Second, lower cost capital. The risk for investment in equity that disclose complete information is lower than equity of a company that withhold information. And last, improve context. So it allows stakeholders to get a better sense of the fluctuation that might affect overall numbers. It designed to help investors to better understand the business and its potential cash flow. However, there are also disadvantages of statement reporting. So, I can give two examples, which is first, emphasis on the present. Segment reporting can place too much of a force on short-term numbers, and second, data manipulation, which is very dangerous because segment reporting lends itself to data manipulation if the information is reported in the true management I style. That's all.
Now, let's move to part B, which is interim reporting. Basis of preparation. Ajinomoto Malaysia Berhad use integrated method in preparing interim report since the interim report is a fraction of the annual report. The unaudited interim financial statement have been prepared in accordance with MFRS 134, Interim Financial Reporting and paragraph 9.22 of listing requirement of Bursa Malaysia Security Berhad. The significant accounting policy adopted for the interim financial statement are consistent with those adopted in annual audited financial statement for the year ended 31 March 2021. The interim financial report has been presented in Ringgit Malaysia and all value are rounded to the nearest thousand except when otherwise indicated. Next, I will talk about accounting policy. The first accounting policy that Ajinomoto Malaysia Berhad used in preparing interim reporting is inventory. Inventory comprising trending goods and consumables are stated at the lower of cost, determined on the wages average basis and net realizable value. It comprises the invoice value of the inventory and the incidental expenses. Net realizable value represents the estimate selling price less estimate cost necessary to make the sale. The second accounting policy is cash and cash equivalents. Cash and cash equivalents include cash on hand and at banks and demand deposit at call, which are subject to an insignificant risk of changes in value. Short-term funds include money market instruments held for investment purpose, which do not form part of cash and cash equivalents. For the purpose of the statement of cash flow, cash and cash equivalent consist of unrestricted cash and bank balance, net of outstanding bank overdraft, if any as they are considered are integral part of groups and company cash management. Next, there are four types of interim report, which is first, the statement of comprehensive income. Second, statement of financial position. Third, statement of changes in equity. And the last is statement of cash flow. An interim report is the reporting of financial result of any period that is shorter than a fiscal year. A company may choose to prepare their interim report half-yearly or quarterly. Ajinomoto Malaysia Berhad has prepared his interim report quarterly. The interim report is prepared for analysis and performance evaluation of the organization.
Now, let's look at the period for the current and comparative for Ajinomoto Malaysia Berhad. Ajinomoto Malaysia Berhad financial year end at 31st March and the current interim financial statement is third quarter, which is from 1st September until 31st December. First, for the statement of financial position, the current interim reporting period is 3 months and the reporting date is from 1st September 2021 until 31st December 2021. For the comparative, the reporting period is 12 months and the reporting date is from 1st April 2020 until 31st March 2021. Second, the statement of comprehensive income. For the current interim, the reporting period is 3 months. The reporting date is from 1st September 2021 until 31st December 2021. For the cumulative, the reporting period is 12 months and the reporting date is from 1st April 2020 until 31st March 2021. Meanwhile, for the comparative current interim, the reporting period 3 months and the reporting date is from 1st September 2020 until 31st December 2020. And for the comparative cumulative, the reporting period is 12 months and the reporting date is from 1st April 2019 until 31st March 2020. Third is statement of changes in equity. For cumulative, the reporting period is 12 months and the reporting date is from 1st April 2020 until 31st March 2021. For the comparative, the reporting period 12 months and the reporting date is from 1st April 2019 until 31st March 2020. Fourth, the statement of cash flow. For the current interim, the reporting period is for 9 months. Reporting date is from 1st April 2020 until 31st December 2021. For the comparative, the reporting period is 9 months and reporting date is from 1st April 2019 until 31st December 2020. Now, let's move to the adjustment. Two adjustments made are involving inventory and trade receivable. And the adjustment is made based on the current asset on statement of financial position of Techwater. First, the cost of inventory as at 31st December 2021 is RM70,484,000. Meanwhile, the net realizable value of the inventory is RM71 million as at 31st December 2021. Second, during the year ending 2021, trade receivable amounted RM49,463,000 as at 31st December 2021. The company estimated that only 5% of the amount would be uncollectible by year ended and only 95% will be collectible. Before we end our presentation, I would like to show the extract of the statement of financial position after the adjustment are made. First, the inventory. Before the adjustment, the inventory value at 70,484,000 and after adjustment made, the value became 71 million. For the account receivable, before adjustment, the value is 49,463,000 and after adjustment made, the value became 46,989,850, which is the collectible amount of 95%.